What is going on, investors? Hopefully guys are doing well out there. That is right. It is Friday. It's time to let loose a little bit because it's time for the weekend. It's also time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we had a Fed pivot that absolutely blew up parts of this market in a good way, I guess, depending on what side of the trade you're on. But I think the question we have going forward is, will this breadth continue to spread out to the FAANG stocks, which have been leading these markets higher, or will the rest of the market catch up? We'll talk about that broadly as we move through today's show and cover all this week's news. Better not waste any more of your time. Kick things off with Meta Platforms start of the week at $324.73, up 2.72% to finish the week at $333.57. Meta is facing a lawsuit from authors over, quote, alleged use of copyrighted books to train its AI models. I say, quote, alleged, because if you read through the lawsuit, sure as heck seems like there's enough evidence to believe that Meta knew it was using copyrighted material from authors of like Sarah Silverman, among others. And it certainly seems like Meta was aware that its use of these books may not be protected by copyright law. There is something called fair use. There is the fact that Meta released these into the open source community. My personal opinion, this is strictly an opinion, is if we are going to train AI models over on copyrighted material like books or movies or anything like that, I think those people should be compensated. Moving on to Apple, start of the week at $193.10, up over 2%. The world's richest company hitting a new high today, up $197.10. It wasn't actually today. About 2 days ago, Apple scaled to a new record closing high, up over $198 per share. Again, on the backs of that Federal Reserve rate cut. You'll see it from a technical perspective as well. We pretty much telegraphed that. Now, Apple now requiring a judge's nod to provide push notification data. I've gotten some, I've got some friends that are in, they're the dark corners of the internet, and they've been sending me stuff like this for a while. Apparently, depending on the circumstances, one could track you through the metadata from your push notifications that previously did not require a judge's approval, some kind of court case, some kind of evidence that you may or may not have committed a crime. Now you, and I think rightly so, you need a judge's nod for that. Now, Apple expands self-service repair to include iPhone 15 and M2 Mac. This is fantastic. If you have an iPhone and you want to just extend the life of it, I haven't done it with this phone because the screen's relatively durable. I'll promptly crack the screen here in the coming weeks ahead. But I've had other iPhones in the past where I've replaced the screens. I think this is fantastic. Certainly not necessarily from an Apple shareholder perspective, but it will extend the life of many devices. Moving on to Amazon, start of the week at $144.34. This stock up a solid 3.65%. Finished the week just south of $150 per share. Now, Amazon is filing a motion to dismiss an FTC antitrust case. The motion was filed in federal court, I believe, last week. And Amazon, look, I'm not an attorney, obviously, and I certainly don't want to be one, but I think Amazon's probably got a chance to kind of wiggle their way out of this one, because the crux of the case is some kind of Project Nessie, which is an algorithm that is used internally by Amazon to address prices. And I think Amazon is going to correctly argue that the FTC does not demonstrate how Amazon harms consumers, and what it does engage in are not simply common retail practice. Any large retail site, Target, Walmart, Best Buy, they're going to have pricing algorithms on there, and Amazon is certainly a part of that as well. Amazon adding that they promptly match rivals' discounts, and you certainly will see that. If Best Buy lowers the price by a penny, within a minute or two, Amazon's price is going to drop as well, because they have scrapers all over these other sites scraping the data in real time. And so if that's the only thing the FTC has on Amazon, to me, the worst case scenario is you pay some kind of fine if you're Amazon. The best case is it gets thrown out completely. Now, retail surprise, those were the retail sales numbers that we got earlier this week, certainly benefiting from Amazon as well. On a side note, not kind of the major FAANG stocks that we talk about here, but I think what stood out to me is restaurants showed an 11% year-over-year gain. Now, some of this is inflation as well, right? If you've been to McDonald's or any restaurant or fast food takeout place, especially out here in California where they're demanding $20 an hour salaries, well, the prices at these places have gone up quite a bit, and so that is helping tick up some retail sales. And moving on to Netflix, start of the week at $463.99, up about 1.75% to finish at $472.06. This was actually really cool by Netflix. They revealed a complete list of what we watched for how long in a completely new data set. Most of the time you were relying on Nielsen data, which you really couldn't trust necessarily from Netflix, or at least have a full visibility. You've only got like the top shows. You literally, and I downloaded this earlier, but you can literally come to this report. It spits it out in an Excel form and see every single show that I think has been on Netflix, over 18,000 titles. You can see how many people viewed it and for how long. It's a fascinating thing. I just kind of looked at it really quick. Pretty cool. Now, Netflix also unveiling a list of games set to come out in 2024. I've been on the Netflix app more recently. They certainly have been featuring those games. My guess is it makes the platform just marginally more sticky. There could be more revenue to come in the future. Moving on to NVIDIA, start of the week at 470. This one popping up nearly 4% to 488.90. Now, NVIDIA CEO eyes chip production in Vietnam. It's tricky whenever you talk about NVIDIA or AMD, Intel to a lesser degree. They often are referred to as chip manufacturers. Probably a more proper way to say that is some kind of chip designer. Also, a production base is not really a manufacturing facility, more or less designing those. But again, I think we're seeing this across the board. You're looking at Apple. They're trying to move some of their manufacturing capabilities outside of China, and you are seeing NVIDIA and others try to diversify as well. Now, NVIDIA can, will, and should sell chips to China. That's according to the U.S. Commerce Secretary, who is part of an administration that has actually put up quite a few roadblocks for NVIDIA, AMD, and others to sell chips into the country of China. Now, for NVIDIA, it's not that big of a deal because anything that they are shipping into China probably can be gobbled up from a demand perspective elsewhere in the United States. But longer term, when the demand starts to wane just a little bit, we'll see what happens there. But it appears that both sides are starting to find the happy medium that maybe they were looking for. Now, Tencent is looking to fill the gap that NVIDIA is potentially leaving, not selling as many chips into China as it possibly can. This ultimately will create new technologies. I said new, I didn't say better. I don't think Tencent or any of these Chinese companies are going to out-design NVIDIA or AMD or certainly even Intel. But at the end of the day, there'll be some new technologies coming out of that. Now, Intel unveils its AI offerings as the semiconductor index, which we've recommended multiple times, hit a new record high. I wonder how somebody do a welfare check on Mr. Michael Burry, who was apparently 50% of his fund was short the semiconductor index. He's got to be feeling a lot of pain right now if he's still in that trade. Now, Intel unveiled its Gaudi 3 accelerator processor. The reviews I've seen, and look, it's not something I have the technical know-how to implement, but from people that tend to be very critical about Intel, tend to be maybe pro NVIDIA or pro AMD or one or the other or both, there was actually some positive reaction here with the Gaudi. So look, I don't know how well it's going to sell into the marketplace. You have NVIDIA basically being the Michael Jordan of the AI accelerator business. You have AMD kind of being maybe the upstart rookie that's getting a little bit of playing time. Where Intel fits in there, in the longer term, there's probably some business there, and we'll see what they capture. Now, Taiwan Semiconductor and every semiconductor stock has been on absolute fire over the past couple of weeks, and TSM set 7 straight sessions of gains. If you own that stock, you're seeing a lot of green. Moving on to Google, start of the week at 132.63. This one slid exactly sideways to finish the week almost flat. Now, this was a pretty big deal for not only Google, but Apple as well. Epic Games, which is a popular video game maker of Fortnite and other games as well, they won an antitrust fight against Google over its App Store, quote, monopoly. So a jury found this oftentimes what we do see in these cases is they are litigated in front of a judge. And in front of a judge, you tend to get, in my, again, more of an opinion here, but just following the news flow of these companies for over a decade, in front of a judge, you tend to get more corporate favorable rulings because of their perception of the law and the way they perceive things. Now, in front of a jury, it's completely different. And this jury unanimously said, no, Google, you have a monopoly and you've been exercising that. And so obviously Google is going to appeal this. They're going to be doing everything they possibly can to uphold their so-called monopoly. But I think the days of the App Store, the 30% or 15% tax, whatever it is, whatever tier you're on, I think those days are numbered for not only Google, but Apple as well. Now, after Epic's antitrust win, the DOJ's search trial now becomes in focus. So you've lost your App Store monopoly, pending appeal, pending several years of litigation likely. Now you're looking at that DOJ search trial, which probably would be more actionable if you lose that. I think the general consensus is this is really negative for Google. Not necessarily in a soaring market. If you get markets to continue to move higher, and then let's think about like the worst case for Google. They've got to break up their ad business. They've got to unload YouTube. They've got to, do something like that or break out the Android business. I don't know. Well, you IPO that business in a hot market. I mean, what would YouTube IPO for? I mean, what is Netflix worth? Give it a bigger multiple, and that's probably what YouTube would be worth. Now, Google officially launches Gemini Pro for its cloud users. I know there was a lot of people that were upset with Google last week, but we said it on the show, and I think the way we reported it was very accurate. Last week, Google launched a Gemini trailer. Okay, when you see a trailer for a movie, you see a trailer for a video game, there tends to be different kind of disclaimers, particularly on the video games. A trailer is a sizzle reel. A trailer can be embellished a little bit, and that's what Google launched. And I actually have respect for Google for being that aggressive and putting out that type of marketing. They didn't have to do that, but they went aggressive, they went flashy. Now, the media wants to call it out as, quote, fake or staged or whatever, and people want to gobble that up and take only that away. No, what you saw was a trailer, and I guarantee you, a year from now, everything you saw on that Google trailer, that Google Gemini trailer, all of that will be standard operating process this time next year, not only for Gemini, but for every large language model that has had a multi-billion-dollar company put money behind it. But we've got Gemini Pro now offered to developers, and things are absolutely heating up as it relates to this, and we'll certainly see where things go. I think it's still a little too early to determine who the ultimate winner is going to be. Now, Google Chrome to test features limiting cross-site tracking to phase out third-party cookies. I know this sounds like literally the most boring headline and the most boring press release ever, but cookies and third-party and cross-site tracking was literally the backbone of the internet since the very early days of the browser. This has its roots in affiliate marketing, which most of the content you see on the internet, if it wasn't for affiliate marketing, cross-site tracking, and third-party cookies, there'd be no incentive to start that blog, start that website, start that informative post. So somebody would click on your Amazon link, click on your eBay link, or click on something to buy, and you make a little bit of money. Chrome has been promising to phase out cookies and cross-site tracking forever now. Looks like 2024, they're going to roll this out to about 1% of their users. Obviously, Google has to tiptoe very carefully. Apple's rolled stuff like this out already. Google's got to tiptoe a lot more carefully because they are an ad company. Now, moving on to Microsoft, start of the week at 368.71, up about 0.5% to 370. Now, Microsoft said to eye nuclear power growth for their AI division. This is a press release that came out December 12th, but If you follow our Bleeding Edge newsletter, there's always a link down below in the description to our newsletter. We told you about this back in October. Microsoft's using these small nuclear reactors to power, obviously, the intent. And you can learn something here as an investor, right? And not really learn something, but you can get some investing ideas just by this headline, okay? So Microsoft's having to go to one of the most efficient and powerful energy sources to power AI because AI is so intensive. They're also seeing so much demand for their products over at Microsoft. Big hint about how the upcoming quarters are probably going to go for Microsoft when they're having trouble powering their servers to handle the type of demand. So there's kind of two-way investment thesis here. You've got exploding off the charts demand at Microsoft, and then you've got obviously things like small modular reactors and other investments into energy that need to continue to accelerate because Google's going to have off the charts demand here. Apple will have off the charts demand. Meta will have off the charts demand. You start moving down the software stack. Many of these kind of quote mid-tier software companies also seeing off the charts demand for their products. Well, there's going to be off the chart demand for energy as well. Now, Microsoft says a new AI model can run on the edge and outperform Gemini and Llama 2. This is how I would have expected Google last week to release Gemini. Some kind of press release like this, and they're like, hey, it outperforms Llama, it outperforms ChatGPT, and we'd all be like, okay, whatever, go about our day. But the way Google did it caught everyone's attention. Some people might say it was false advertising or if it was fake. I don't care about that. They got you to pay attention. I guarantee you none of y'all knew. Microsoft said this week their AI model can run on the edge and outperform Gemini and Llama 2 unless you're a complete AI dork. So expect in the coming year, there's going to be a lot of trailers. There's going to be a lot of hype around these language models. I wouldn't believe everything that you see, but the hype in a lot of ways is getting the attention. And I think that's what you need in this market. Now, moving on to Tesla, start of the week at 240, 261. And the stock that benefits the most from lower interest rates is Tesla, since you have to borrow money to buy their product, borrow lots of money to buy their product. This stock up nearly 4.5%, finished the week at 253.50. Tesla recalling, we'll put recall in quotes here, over 2 million vehicles to address a quote autopilot issue. This recall is an over-the-air software update, which is if you own a Tesla, is almost a weekly occurrence or some kind of software update for the car. Autopilot is, I believe, standard on every single car. It differs from what a lot of people that don't own Teslas or only casually follow it. There's full self-driving, which is a beta testing or more or less a beta piece of software that you have to pay like, I don't know what it is, $10,000, $15,000. It will do full lane changes. It will stop at stop signs. It'll back out of your driveway, drive you to the grocery store, park, all those types of things. Autopilot is used almost exclusively on highways and freeways, and is one of the premier features, in my opinion, of a Tesla automobile that I absolutely love. These improvements, software upgrades, if you will, has some believing maybe a smoother regulatory ride ahead for the automaker. Now, Tesla bagging incentives worth $153 million for its Mexico Gigafactory. They were very proudly proclaiming on Bloomberg today. I was listening to Bloomberg radio, and there was some scrub reporter on there lamenting by the fact that Tesla hasn't even started, and there was cactuses growing on the site. Hello, you don't start building a gigafactory until, number one, you have a clear sight of demand, which I don't necessarily think Tesla has. You want to line up all these incentives. And the last thing is you want the government to foot the bill. I mean, this is like Corporation 101, right? The Mexican government needs to improve electricity, water, and transportation before the construction begins. So this reporter was almost like reporting like, oh, Tesla's dropping the ball here. Tesla's falling behind. No, they are waiting for all their ducks to be in a row before they get on board there for a gigafactory. I'm not trying to be like this Tesla perma bull. There's just a lot of really bad. Now that Elon Musk in particular owns Twitter, there's a lot of people that are bent about that. They're bent about his politics. And so the coverage you see is very, very, very questionable in my opinion. Also, they don't advertise on these networks as well. So there's that as well. Now, moving over to the technical segment of the show. Holy decisive breakout. I mean, I was not expecting this this soon in the year, but we were talking about how we were kind of wedging out here. I was expecting to get rejected here, make one touchdown here, maybe at the beginning of the year. You have kind of this move higher in the markets. Well, we kind of jumped the gun and we put up a solid green bar on the screen, some increasing volume as well. When you see volume tick up like this, it means this not only did the sellers dry up, but the buyers stepped in kind of incrementally. You absolutely confirmed that's over. You are still firmly in this uptrend. You just confirmed a new higher high. You are confirming when, it's not if, when the S&P 500 has a pullback. And when it has a pullback, it could be a pretty steep one. You could go from 4,700 and change on the S&P 500 back down to 44. When it makes this move, a war might break out, interest rates, inflation, something might come back. Something bad is going to happen, right? But you have to trust the chart because wars have on this uptrend since October of 22. Multiple wars around the country have broken out. Inflation's gone up, it's gone down, and it's gone back up, and it's gone back down, all through this chart. Interest rates have actually just steadily rose during this entire, and we're looking right here, this uptrend right here. You get a pullback in this one, you have to buy it. And look, this is not the first time I've said this. I've said this really probably since this bottom here in March. You've had to buy these pullbacks every time. And if it makes you nervous to buy the pullback, well, you set your stop under the previous lows. You buy here at 4,400 with a downside move to 41. 200 points and downside to, guess what? Make a new higher high all the way here off the freaking charts up here to 5,000. So you're missing 200 to the downside, 700 to the upside. If you can't take that risk reward, I think you find somebody else to manage your money for you. Period. End of story. Moving on to Meta. Still looks good. Higher highs. Didn't confirm it this week. No big deal. You could confirm it next week or even next month. No big deal. Still making higher lows. Still in this channel. Off of the breakneck pace that we were on from the lows, this stock's still looking good. Looks like absolutely to me, you're going to want to retest these highs up here at 385, giving you still another $50 higher likely for Meta. Moving on to Apple. Talked about how we broke to new highs back in May. We've back tested those highs back in like October, and now boom. Oftentimes after you back test, you'll see this on the Microsoft chart. Boom, you power up to new highs. That's what Apple has done. You get a pullback in Apple. You are also buying that dip as well. Moving on to Amazon, consolidating very tightly at these levels. Not seeing it really confirmed with volume. Volume's relatively flat. Got an equal number of buyers and sellers at the 145 level. Amazon, for you to get really excited about it, needs to push back up here into the 170s. If it doesn't, you're buying the dip down into like the 120s on that one. Moving on to Netflix. We have a new chart here. We were on kind of a breakneck trend. We broke trend, back tested trend. Now I think we're just flattening out trend. You're buying the dip also on Netflix. And again, when I say buy the dip, if you're concerned about these, and you really should just do this out of a matter of principle and discipline. Okay, so let's examine here. Netflix puts up a red candle. Markets turn sour. You go from 475 down here to the bottom of the channel, somewhere here at 370. Could be 375. Could be a little bit lower than like 360. You start buying your share. Let's say you want 10 shares of Amazon. It starts making this red candle. And I'm just telling you what I do. I would start buying it at 380, 375, 370. I would come all the way down here to right about 360. And then boom, your stop loss under these lows right here at 345, 340. You would not want to break that level, then something weird has happened. But you're buying. You should hit support here. And I've told you so many times here on the channel, we looked at like Bank of America. How many Bank of America freaking videos did I do to tell you, hey, $25, $30 per share is where it's going to bounce? Sure enough, that's what it did. You can come look at Nike. How many Nike videos did I do? Say, hey, we're on a 40-year uptrend on this stock. Down here, just south of 100 is where you should buy it. You can look at a stock like Lowe's. Also, coming back to trend, bounces off to trend. Other stock that we've talked about, Home Depot, multi-year trend, but even in the shorter term, you don't buy the dip in a downtrend. This is what I fight with people on the comments. You look at a stock like PayPal. Has PayPal bounced off the lows? Yeah, absolutely. Has it broken out of its downtrend? No, it actually hasn't. PayPal needs to get all the way up here to about $80 per share until this trend is over, and then you're going to get a pullback in PayPal. That's where I would buy it. But until it doesn't break out of this trend, you have to assume this trend keeps going down and this stock's heading to 40. Netflix is not in that case. Netflix is still in an uptrend. In an uptrend, you do buy the dip and you protect yourself to the downside by setting stop losses just underneath the previous lows, which are here. That's like basic stop loss. If you want to be slightly more aggressive, I wouldn't recommend this strategy, but there's these other lows here at 315 and 280. You absolutely should get stopped out of this stock at that point. Remember, when stocks are in uptrends, you buy the dip. When they are in a downtrend, you wait until it reverses trend to step in. This is not like some of you guys are like, oh, Colin, you're trying to time the markets. No, this is actually the opposite of trying to time the markets. People that buy stocks in downtrends are trying to time the bottom. When a stock is in an uptrend, it means it is moving higher. And when it goes lower, it means you should step in and freaking buy it. Looking at NVIDIA, nothing new here. We are consolidating between, call it 400 and 500 until you get a decisive break higher or a move lower. You are just simply moving sideways on that one. Moving to Google, also appears we're just kind of flattening out this downtrend. If you get a move down into, we'll call it the 120s with Google, you're buying it there. Your stop loss would be at 119. This is one of the best setups out of all of these stocks because you would come down here to, we'll say, 125. You'd be risking about $5 to make a new high up here at 140. So you'd be, or 145, you'd be risking 5 to make 20. Guys, that's a 4-to-1 risk reward. And you can just do the math on that type of thing. If you constantly have 4-to-1 risk rewards and you're hitting them a decent percentage of time, well, yeah, your portfolio is doing pretty good. Also with Microsoft, now we're on a breakneck. When you get these really steep uptrends like you're seeing with Microsoft, I'm not like loving like buying the dip on these breakneck uptrends, but I certainly could see that with Microsoft, this stock looking great from technically and fundamentally as well. Also Tesla's probably the one that's closest to a buy at the current time. You're still in the shorter term with Tesla, higher highs, higher lows. This one has a great risk reward setup. If this uptrend holds, we'll say Tesla walks back to 230 with the potential to make a new high conservatively back up here to 330. So you have $100 upside with a stop loss that you'd set here at 193. So you have 40 to the downside, 100 to the upside. You'd probably like it a little higher than that, but Tesla's a wide volatility stock. Everything looking absolutely fantastic in the stock market. The S&P absolutely sensational. If you stretch it out to kind of the small cap or the Russell 2000, guys, look at the headroom. I know a lot of these FAANG stocks are at highs, and it doesn't appear there's a lot of move higher. Look at small caps. They consolidated in this 175, 180 region for over a year, could not get above 195. We literally just did it today. Now, it's not as rock solid as you'd like. You'd like to see confirmation again next week. Again, this is the small cap. You get small caps to push higher. You could go from 195 on the IWM all the way back up to 250, and it would simply be a resumption of the trend that you've been in really since the beginning, literally the beginning of the index. So yes, the Federal Reserve is pivoting with Apple at highs, Microsoft at highs, Meta near highs, NVIDIA at highs. The S&P 500 is very close to a high. But when you look at the largest amount of stocks, the Russell 2000 index, they are well off the highs. And so there could actually be a lot more room to run here if the markets stay as bullish as they have been over the past couple of weeks. Folks, hopefully you guys enjoyed today's video. We'll be back again soon with more. Have a great weekend and a safe one. Good luck with your investments.